Dave Ramsey hates your VA home loan, and I'm gonna give you a few reasons why he's absolutely wrong. First of all, let me start by saying, Dave, if you ever see this, I'm a huge fan. We are a part of your debt-free world. We have no other debt other than our mortgage right now, and that is because of you. I attend Dave Ramsey's leadership event every year. I have for the last 5 years. I am a huge fan of the way that he preaches financial stability, financial literacy, and I do believe that people spend way too much money on consumer debt and they don't have a healthy savings pattern, and it is a big reason why people are continually chasing financial freedom and find themselves in the rat race. That being said, I am a veteran. I possess a VA home loan. I have helped thousands of people realize their dream of home ownership because of their VA home loan. Now, to be fair, if you have a big pile of cash somewhere and you have it to put down on a house, could there be more economic ways to buy a house if you had a big pile of money somewhere for a giant down payment? Sure. That is not the reality for most people, and that is not the reality for most active duty or prior service members. We have a VA home loan, and I'm going to tell you a few different reasons why it is absolutely the best possible tool to use to get into home ownership without a massive down payment. So number one is that piece, the down payment. There is no required down payment. You can put a down payment if you choose, but it is not a requirement of the loan. The Department of Veterans Affairs issues an insurance policy on your mortgage, so when somebody like me writes a mortgage for you and they loan you the money, the VA insures that money, thus eliminating the need for a down payment. The other thing that this eliminates is mortgage insurance. If you're not familiar with what that is, it is an insurance policy that you have to take out against your mortgage anytime you put less than 20% down. So when you're comparing your VA loan, which is zero down, against a conventional, an FHA, or any other loan program that has anywhere less than 20% down, you are subject to paying an annual or monthly mortgage insurance. And depending on where you're buying and the size of your loan, your credit score, and a few other factors, that mortgage insurance could be hundreds of dollars a month. So let's say you take Dave's advice and you set aside a down payment of 10 or 15% before you go and buy, and you use a conventional loan because you were told that's better than a VA loan, you're still going to pay mortgage insurance where you wouldn't have if you would have used your VA home loan. One of the other arguments that's made is that they're more expensive when it comes to fees. Honestly, I have trouble even finding what the hell he's talking about on this because the fee structure is no different than any other loan program when you buy a house. The only thing that there is a funding fee to the VA when you use your VA home loan. This is a dollar amount that's financed onto your loan and is dependent on how many times you've used the loan, if it's the first time, or if you've used your VA loan more than once. That dollar amount that's financed onto your loan, not that's brought into closing, that's paid to a fee or a third party, that's financed onto your loan, can vary, and it would go up if you used it more than once. Now, the thing that isn't talked about is that if you have any form of qualifying disability through the service, you have a VA disability rating, that number for your funding fee is zero. No matter how many times you use the loan, no matter what size the loan is, it is zero forever. So if you've gotten out of service and you have no money for down payment and you have a disability rating through the VA, you're now not paying mortgage insurance and you don't have the fees that Dave's talking about. So again, that was a stretch for me to put that together on why it might be more expensive, as well as companies like mine and many others that are out there completely waive all lender-related fees for veteran clients, meaning there is no processing or underwriting with a lot of different lenders that are out there. As a benefit to the service member, they waive or cover those fees. My company that I work for does that. We've always done that, and we will continue to do that, thus making the fees actually lower than any other mortgage program. So one of the things that he mentions in the video, and again, Dave, I don't mean to sharpshoot you here, but you said that FHA is better than VA. And again, I've been doing this for almost 20 years and I don't know what you're talking about. I can't find one argument in favor of an FHA loan over a VA loan. An FHA loan has a funding fee just like the VA does, an upfront mortgage insurance fee. that just like the VA's funding fee. However, it doesn't matter if you have a disability, it doesn't matter how many times you've used the loan, it's the same for every single person, every single time. So there is no getting away from it. Number two, it has mortgage insurance. It doesn't matter how much money you put down, you're always gonna have mortgage insurance. You could put 50% down and you're gonna carry mortgage insurance for the life of that FHA loan. Qualifying, you actually qualify for less house with a FHA loan than a VA loan because of the way the qualifying guidelines work. The VA is the most flexible loan program that exists, period, when you're comparing it to the other traditional loan programs that are out there. Conventional, jumbo financing, if you've heard that term, FHA and VA. VA is by far the most flexible and gives you the greatest opportunity to realize your dream of home ownership. Your debt to income ratio can be higher. There is very flexible guidelines surrounding the length of time that you've been employed, the amount of assets that you need to close your loan. Everything that tends to be a barrier to entry to get into a house, the VA has written a relatively favorable guideline for because the program was designed to give the veteran the best possible chance to own a home and to get approved for that loan. And that's how those guidelines, that's how the VA wrote those guidelines so that the mortgage company, like me, could use those guidelines to interpret them in a way that benefits the veteran, and you always err on the favor or in favor of the veteran when you're looking at the guidelines. So when you're comparing it to an FHA, unfortunately, Dave, it's not a comparison at all. The VA loan wins 100 out of 100 times. The last thing that we're going to talk about is related to the interest rate itself, the thing that actually dictates what your mortgage payment is going to be and how affordable that mortgage is. So when Dave is saying a conventional loan is better than a VA loan, there's a very small amount of conventional loan scenarios where that's actually going to be true, where it's actually going to be cheaper. If you're comparing apples to apples, the VA loan 100 out of 100 times is cheaper than the conventional loan because one, it'll never have the mortgage insurance no matter how much you put down, and two, rates on VA loans are historically significantly better than they are on conventional loans because of that government, that VA, that Veterans Administration insurance that's issued for that loan. Now, on average, let's say you have two very equal candidates, both with, let's just say, 10% down, and one's a conventional and one is a VA loan. The VA loan, on average, is going to be about 0.5% better in interest rate than the conventional loan. So not only is the interest rate better, there is no mortgage insurance on the VA loan. So you're going to see hundreds of dollars, depending on how much the loan is for, you can see hundreds of dollars in savings between a conventional and a VA loan. The VA loan is more economical. The other part of that is your VA loan is not as credit dependent, meaning what your credit score isn't going to create these massive fluctuations in your interest rate like it would with a different kind of a loan. The VA has very flexible credit guidelines, and most companies will go down all the way to a 580 credit score, whereas a conventional, you can't even get a loan. There is no option below a 620. And if you do have a lower credit score, by average, right? If you're on the lower end of your credit score, you are going to get a significantly different rate with a conventional than you did if you had a very good credit score. Let's say we're comparing a 600 to a 720. There is a big gap in the interest rates for a conventional. They fluctuate widely. Whereas a VA, those deltas, that gap is much smaller. It's not as credit dependent. And one fun fact, the VA actually does not have a minimum credit score. The bank that you're applying for that mortgage with has a minimum credit score requirement in most cases. That's why if you're watching this, you probably said, what the hell? I went and applied through my bank or my credit union or whoever it is that I have my auto loan with, and they told me I needed a 620, a 640, a 660, a 680. There's varying answers all over the marketplace, and it's because those banks have put criteria in place that's their own risk management. What they feel is the minimum credit score that they're willing to do. The VA does not have a minimum credit score requirement. So it's in your best interest to go out and find a lender that is actually going to adhere directly to the VA's guidelines and doesn't have restrictions that are overlaid on top of those guidelines. And that does exist. You can reach out to us and we can talk you through it. So there's a few reasons why Dave, on this one, I gotta tell you, man, we don't see eye to eye. I love you. I love that I don't have credit card debt and that I don't carry a bunch of high interest student loans or car payments, but I'm gonna take my VA loan over an FHA or a conventional every day of the week. Sorry.